We are Guaranteed Rate, a group of over 5,000 slightly obsessed mortgage-loving people driven by the belief that getting a mortgage should be an awesome experience. We're driven by technology, powered by humans, fueled by positivity, and guided by the belief that everything we do starts and ends with the customer. Which explains a lot, like how we've grown from a startup to the third largest retail mortgage lender in less than 20 years. It explains why we invented the world's first all-digital mortgage that's simple, safe, and celebrated by NerdWallet. It explains our suite of simple digital tools that respect your time. Putting the customer first is why we have over 150 different ways to get you the precise mortgage you need, and more top-ranked loan officers than any other company to guide you to the perfect one. It's why we treat employees like the rock stars that adorn our walls, why we have a stadium that supports America's pastime, and why we have an employee-driven foundation dedicated to helping people experiencing hardships in the very communities we serve. When you put the customer first, it's no surprise 96% of our customers would recommend us to their family and friends, because we believe that when you treat everyone, from customers to employees to partners, like you treat your family, you end up with a lot of friends. We're Guaranteed Rate. Positively different.
Thank you, Guaranteed Rate, and hello, everyone, and welcome to Unlock Your Dream Home, where we educate and empower you to become a homeowner and create housing security for you and your family. My name is Mac Blankenship, VP of Mortgage Lending with Guaranteed Rate. My NMLS number is 208691, also known as Mortgage Mac. That's first name Mortgage, last name Mac, and your mortgage professional for this webinar with over 30 years of helping families unlock their dream home. Do me a favor, please hit the like button and let me know you can hear me loud and clear. Okay, I'm excited to have you here today. And I know, and I'm sure you know, buying your first home can be exciting and life-changing. You're about to make what is likely the biggest financial decision of your life, and we're here to help you every step of the way. I hope to answer all of your questions within the next hour, and if I miss anything, we'll have a Q&A at the end of today's event. And now for a little housekeeping. On each page, there will be a QR code with a link to even more relevant details to each page's subject matter. So be sure to catch the QR code for each page. And also, I plan to pause periodically for quick questions and answers and an even longer Q&A at the end of today's session, along with a couple of fun facts. Now, let's get started with tonight's steps to unlock your dream home. We will identify what each step is and what you need to know about each step. Step 1, we'll ask the question, are you financially ready to buy a home? 2, we'll discuss credit scores and more. 3, we'll discuss the right loan program for you. 4, applying for pre-approval and pre-approval versus pre-qualification. 5, knowing what you want in a home before shopping to help your realtor narrow the selection. 6, what we believe you need to have, why we believe you need to have a realtor. 7, making an official offer to the seller. 8, the importance of a home inspection. 9, what is an appraisal and the importance of shopping for insurance in advance. 10, negotiating your offer after inspection and any seller counteroffers on price and terms. 11, the lender's mortgage process. 12, a list of documents and reports needed to process your loan. 13, locking your interest rate. And hey, what is APR? 14, closing and funding your loan. 15, what not to do during the mortgage process before and when all of these steps are complete. It's time to celebrate because you've unlocked your dream home.
I can't do this anymore. I can't. I give, and you take. When I ask you to do something or even fix something for me, you just ghost. But oh, when you need money, you're all over me, like all stocky and weird. This is so not working anymore. I need my space. So whatever this even is, it's over.
Wait a sec. Does this mean you're not renewing your lease?
To know is to have control. Having control is to own the power. We want to empower you to unlock your dream home and fire your landlord. All right, let's get started. Are you financially ready to buy your first home? What is it? Well, the best way to know for sure is to know what you can afford, which is step one of unlock your dream home. And now, while you might be anxious to finally grab those keys and make a home your own, you should ask yourself, am I financially ready? We believe it is vastly important to go into this endeavor knowing your numbers, including total monthly mortgage payment and total cash to close. What you need to know, having a budget will empower you and relieve many of the anxieties associated with taking on new debt. So let's start with step one. We're going to add up our monthly income after all payroll deductions, meaning we're going to take our gross, we're going to deduct all payroll deductions, and this is your net income. Then we're going to add up all your debt payments, outgoing living expenses, excluding rent. We're going to subtract all your total living expenses, utilities, insurance, cell bill, cable bill, eating out, and credit card payments from your net income. And this, ladies and gentlemen, shiny new dollar figure is your discretionary income, which can be devoted to paying a monthly mortgage payment and the expenses associated with home ownership. Now, the first QR code here is a link to consumer.gov, and it contains everything that you would need to know about managing and controlling your money. Step two, figure your monthly mortgage expense, which will include PITIA. And the mortgage payment includes principal and interest, which is the P&I, but it also includes taxes, which is the T. The I stands for insurance, which generally there's two types, mortgage insurance and homeowners insurance. And the A stands for association dues, just depending upon whether or not your community has community associations. The second QR code will take you to my online affordable calculator, which is a monthly payment calculator that will help you figure your monthly PITIA on a given home. Now, step three. Let's not forget the extras. You'll need extra money left over after deducting PITIA from your discretionary income to ensure you are prepared for expenses that as a renter, you did not have to pay. It's a pain when the water pipes burst, the AC goes out in the middle of the summer, or the roof starts leaking, and any other mishap that may occur. As a homeowner, they will now be your responsibility, and we want to prepare you for that responsibility. Step four is let's be prepared for emergencies. You'll need to have emergency funds set aside to account for unexpected problems and challenges that life brings on. Step five, finally, ask yourself, do I have enough money saved? It is highly recommended that you determine, or with a qualified mortgage loan originator, as close as possible, the amount of money you will need to purchase a home, which includes down payment, insurance, closing costs, and taxes, to determine if you have enough money saved. And if not, how much more you need or to save or obtain as a gift from a relative or from a down payment assistance entity such as state, federal, local, or nonprofit entity. This exercise will give you a firm idea of how much of your net income you can commit to a monthly mortgage payment and the responsibilities that come with it, along with how much you will need for down payment, closing costs, and taxes at closing. Credit score and more. Well, what is credit score? Well, we use the term FICO, and FICO is a computer-generated number that analyzes your past and current credit history and spending habits and rates your ability to repay future debts. The name FICO is an acronym for Fair Isaac Company. A typical score will include timely credit payments, amount of debt owed, number of credit accounts currently open, number of credit inquiries. And what you need to know, you'll have a better chance of approval and becoming a homeowner with a higher credit score, but credit scores are not the only factor. And just because your score may be in the average range or lower does not mean your loan will not be approved. And let me repeat that statement. Just because your credit score is in the average range or lower does not mean that your loan will not be approved. So do not let your score alone deter you from applying. At the very least, we'll have a plan to be successful at some point in the future, because I believe in yes or plan, not yes or no. One of the other factors that we look at as well is income stability for the most recent 2 years. Salary and hourly versus commission, bonuses, and self-employed. Salary and hourly do not necessarily require a 2-year history, but if your income is variable due to commissions, due to the variable number of hours or bonuses, or because you're self-employed, a 2-year history will be needed. However, if your salary, and let's say you're an engineer or a teacher and you come right out of school and get an offer letter and go to work, that is considered acceptable income stability based upon the education history. Now, ratios are, and debt to income, which is often referred to as DTI, is an equation wherein the lender divides your debts and proposed mortgage payment into your gross income before taxes. Qualifying debt to income is different based upon the loan programs, which we'll discuss more in a different slide. Again, going back to savings and assets and demonstrating the ability to save money and control your expenses also plays a role in your loan approval. We will, as your lender, will want to verify you have sufficient money on deposit for down payment, closing costs, and taxes, or we want to verify that you will have that money available from an acceptable source before closing. Hence the do you have enough money saved question in the previous slide. Money left over after closing we call cash reserves, and that also looks very, very good on your loan approval.
Worry you don't have the funds to buy your first home? Well, don't lose hope until you've checked out all the many programs and resources that can help. Like FHA loans, USDA loans, VA loans, Fannie Mae loans, Freddie Mac loans, the FHA Energy Efficient Program, Freddie Mac Home One, the Chenoa Fund, Community Seconds, and the FHA 203K program. Then there's the National Home Buyers Fund Diamond Program, the VA Renovation Program, Fannie Mae Home Ready, Freddie Mac Home Possible, and even a federal penalty waiver for buyers who tap into their IRA account. Not to mention all the many, many other programs on the state level. And the best way to get a handle on these resources, just call, text, or email your Guaranteed Rate loan officer today.
All right, the right loan for you. Step 3 of Unlock Your Dream Home. What is it? There are many, many types of loans available, and each with their own different pros and cons, and finding the right one for you is sort of our responsibility in our relationship with you. And what you need to know is that GR has over 150 different loan programs available. I heard somebody say that we have over 100 and something different down payment assistance loans available on a national basis. We offer fixed rates that generally do not change during the life of the loan. We offer 15 and we offer 30. 30 is what most people prefer in their mortgage for their mortgage payment, but we also offer adjustable rate mortgages because, as you probably know, interest rates have declined quite a bit recently. And however, adjustable rates are only fixed generally for a shorter time frame of, say, 3 to 7 years. We also offer an FHA loan, which is a government-insured home loan with a down payment as low as $100 for first-time homebuyers purchasing FHA foreclosures, or 3.5% on all acceptable properties, and typically FHA will allow for lower credit scores. We offer VA loans for current service members or honorably discharged service members. VA loans do not require any down payment, do not have any mortgage insurance, and typically have a lower interest rate. And if you're a disabled veteran, you may not have to pay the funding fee. In addition to VA and FHA, we also offer USDA, which is another government insured loan, does not require any down payment. However, it is restrictive based upon the geographic location median income, and family size. In addition, we offer conventional loans from Fannie Mae or Freddie Mac, and they are insured by the private sector and offer down payments as low as 3%, but require higher credit scores than, say, a government-insured loan. And in addition, Fannie Mae and Freddie Mac just released a new program where they require at least one applicant on the application to be a first-time homebuyer, and it has some very distinctive benefits for folks whose income, based upon the geographic location of the property, is 100% or less. In addition, another one of my favorites, renovation loans. Renovation loans can be conventional, they can be government insured, and it allows you to add the cost of improvements to the loan amount for a used home and allows you to close on the home first, then make the improvements, and will allow for up to 6 months worth of mortgage payments to be financed into the loan amount, so you can defer those payments up to 6 months subject to approval. In addition, first-time homebuyer and down payment assistance programs. Lots of different options available. DPA options like this Texas State Affordable Housing Corporation, or one of my favorites, the Texas Department of Housing and Community Affairs, generally range with a down payment assistance amount of anywhere from 2 to 5% and are available, like I said, on conventional or government-insured loans. Another one of my favorites for first-time home buyers that have income restrictions is Mortgage Credit Certificate, which offers a tax credit of 20% of the interest paid annually. And hey, not all of these programs require you to be a first-time home buyer. But with that in mind, let's pause a moment for a fun fact. And if you have any questions, please feel free to drop me a note in the comments section. But fun fact number one, what defines a first-time home buyer? Is it one, someone who has never owned a home ever? Is it two, someone who has not owned a home in the last 3 years? Or is it three, someone who has been displaced due to divorce? And I will give you 30 seconds to share with me your answer, and I will give you the correct answer, and we will move on. Okay, fun fact. What defines a first-time home buyer? The answer is two, someone who has not owned a home in the last 3 years, and number three, someone who has been displaced due to divorce. All right, get a pre-approval, which is step 4 of steps to unlock your dream home. What is it? An approval letter is we call it a Form B. Officially, it's called a Form B, and it is a promulgated form by the governing body for the state of Texas. And it shows, and if you have one of these, it shows that the lender has evaluated your finances and are tentatively willing to lend you the money. And what it shows the seller more than anything is that you're serious and you mean business. And more than that, pre-approval, like I said, shows the seller that you're serious, gives them the assurance that you can close on your loan timely, which puts you in a much better position to negotiate and compete with other buyers. Our same-day approval is if you want to get started, you can start at mortgagemac.com, but our same-day approval offers are available in Spanish as well, and we offer a 24-hour turnaround time for approval. Our same-day approval gives you the strength in helping you compete with cash offers and the flexibility to renew your approval every 30 days to give you time to find the home that is right for you. And if you're new to this, many times you'll hear the term pre-qualification, which is a term used at this stage of the home buying process. And there is a distinct difference between pre-qualification and pre-approval. Pre-qualification is generally what we call a Form A. Form B would be pre-approval, and experienced real estate agents know the difference and prefer a Form B over Form A any day of the week, month, year, Knowing what you want in a home is step 5 of Unlock Your Dream Home. And what is it? Now, let's talk about what your needs and wants are in a home, and what matters most when buying a home might be different for you as, say, the next person. So what we need to know is that there are 2 major aspects of your home that will have the largest impact, and on what you decide will be specific to location and type of home. Location generally refers to neighborhood, which includes schools, attractions, accessibility, safety for both crime and extreme weather events, along with community and feeling good about the people that you will be living with and around. Now, location was number 1, and number 2 is the type of home you want to live in. Is it going to be a single family home, which generally features a yard and more privacy? Or a townhome where you might have very limited yard space but closer to your neighbors? Or say a condominium if you don't need or want a yard and prefer to be closer to your neighbors. And finally, are you looking, like I said, a new home or a used home? Both have their own advantages, and it's recommended that you speak to your realtor in reference to those different advantages. Regardless, you should go into your house search with a clear idea of what you absolutely need in a home versus what you would like to have. All right, choosing a realtor. What is it? A realtor is a licensed person who acts as an agent on the purchase of property and is a member of the National Association of Realtors. Professional realtors understand the ins and outs of the local housing market and assist in your journey to unlock your dream home. If you do not already have a realtor, my team and I would be delighted to refer one to you. Here's what you need to know. Realtors perform an enormous number of tasks. The QR code in this particular slide has a list of over 184 tasks that your realtor can perform for you and as a buyer and or a seller. Now, let's discuss making an offer. What is it? So you have a loan approval, you've hired your realtor, you've determined the location and type of home, and you've found your dream home. The next step is to make an offer to the seller. Here's what you need to know. This is where you and your realtor work closely together to determine sales price, terms and condition, closing costs, timing associated with home inspection, timing associated with closing date, and other non-realty items such as permanently connected property to permanently affixed items to the property, such as curtains, refrigerators, maybe washer, dryers, etc. Next is the home inspection, and what it is. It is the objective of the home inspection is to uncover any structure or safety issues, which will include walls, windows, floors, plumbing, air conditioner, electrical, appliances, rooms, attics, anything inside the home. Now, the home inspection is the responsibility of the buyer, and the option period in the contract, as defined in part of your negotiation, gives you a set number of days to have the home inspected by a licensed professional. All right, what is an appraisal? An appraisal is an unbiased opinion of value based on a licensed appraiser's analysis of the property's condition and similar values of similar homes that have sold and are in the same vicinity as the subject property. The lender will require this to be paid in advance, and it typically runs anywhere from $575 to $900. You will receive a copy, and the report will include a detailed analysis of the home you've contracted to buy, and it's intended to ensure the fair market value of the home is consistent with what you've agreed to pay in your contract with the seller. In addition to that, homeowners insurance, which we often call hazard insurance, covers your home against fire and other hazards. The policy is paid at closing, but I highly recommend, and it is a really good idea, that you begin to shop the costs associated with the homeowners insurance or hazard insurance as soon as possible in the process. Older homes may cost more to insure versus newer homes, and there's just a whole host of different items associated with the property that insurance agents look at to make a determination as to the annual cost for homeowners insurance. Next, negotiations. What is it? When making your first offer, many times a seller may counter and wish to negotiate different aspects of the deal. In a seller's market, you'll see more bidding wars and buyer competition, such as during COVID. In a buyer's market, sellers are more amicable and generally negotiate less as there are fewer buyers in the marketplace. What you need to know: have your loan approved. Puts you in a much better position to negotiate anything within the framework of that contract as opposed to not being pre-approved. Raise your offer if it makes sense to do so. Discuss it with your agent. Ask for concessions, again, if it makes sense to do so in conjunction with your loan and with your conference with your real estate agents. Also, understand contingencies. Again, good subject to discuss with your realtors. Contingencies could include a mortgage approval if not already done, the inspection which we referenced earlier, the appraisal, and it also will include title and survey, which we are not going to discuss today. But if you own a current residence and it hasn't sold and you need it to sell, a contingency could be the fact that you need to sell your current home to be able to purchase the next. So let's pause just a moment for any quick questions. And fun fact number 2, a homeowner's net worth is how much more than that of someone that pays rent. So let's see, we have option answer number 1, 10 times more. Number 2, 20 times more. Number 3, 30 times more. Please put your answer in the comment section. Thank you. And the right answer is number 3. A person that owns a home versus someone that rents, their net worth is 30 times that of someone that just pays rent. So let's talk about the mortgage process here and what the lender actually does. So you found a home, you made an offer, negotiated the price, done your inspections. We're going to talk about locking your interest rate. Now the action shifts from you and your realtor to your loan officer and his or her team and the title company. Here's what you need to know. A guaranteed rate process works something like this. Subject to your loan having a same-day loan approval, which could be much shorter and much different. Here's what you need to know. The first milestone at this stage of the mortgage process would be the delivery of a loan estimate and loan disclosures. The loan estimate, very important document, is a detailed 3-page document provided to you by your lender, which details loan terms, estimated taxes and insurance, total PITIA, and other features that impact the loan, along with an estimate and itemization of all costs related to the loan process and the annual percentage rate. The loan estimate is required to be sent within 3 days of your application, and to meet the definition of an application, it must include your name, your income, your social security number, property address, sales price, and a proposed loan amount. The loan estimate is generally accompanied by a host of other disclosures, and the lender will want you to e-sign and acknowledge having received the disclosures before proceeding with the mortgage process. In addition, any material impact on your loan, which would cause the cost to go up, has to also be redisclosed within 3 business days. So, first QR code is for details about the loan estimate and a sample. So once you've acknowledged the loan estimate and loan disclosures with an e-signature, your loan application, documents and disclosures are submitted by your loan officer to our team, to my team, which we refer to as a pod, which is a dedicated group of professionals whose responsibility it is to help you through this journey. The mortgage consultant, which is the first person after me, collects documents and verifies the data on the application and may request from you additional documents if need be to prepare your loan application to be submitted to underwriting. Once all the documents are collected, the MC will submit your loan to underwriting. Underwriting will review the application, the credit documents, and determine if your application meets the loan program requirements. Then your loan goes to what we call an LC, or loan coordinator. The LC receives the approval from underwriting and will reach out to you if any additional documents are required for a clear to close, and will begin preparing your loan for closing disclosure and closing documents. Once the loan is clear to close, issued by underwriting, the LC and closing team will work together with title to prepare the final closing documents. The final closing documents are the final legal documents that bind all parties, which we will discuss further in another slide. All right, so let's talk about your checklist for your mortgage. And this is a really modest list of tasks and performed by your lender and items that you'll need to provide. Our digital mortgage artificial intelligence can help with many of the items on this list. If you, when you apply, if you provide your bank ID, your bank's password. Clearly, the most important things here are the appraisal and insurance. And for a complete list, that QR code you can find at www.teammortgagemac.com. So let's talk about locking in your interest rate. What is it? When we lock your rate, it means that the rate will not change before you close on your home, no matter what happens with the Feds or financial markets. Locking your rate is highly recommended in today's volatile markets, and locks at GR are offered for 30 days and up to 1 year if you happen to be building a home. APR is the total cost of borrowing money from your lender. It's determined by your interest rate and additional charges, such as the term you've heard, points and or discount points, which is upfront interest paid to have a lower interest rate. It could also include a lender credit, which is the opposite of points. You have origination fees, which are charges paid directly to the lender. You'll have closing costs, which include fees that are paid to other third parties involved in the transaction, such as appraisers, surveyors, title companies, government agencies. Also, mortgage insurance is included in the APR and required for borrowers who do not put 20% down. All fees, along with the locked or floating rate and the APR, are disclosed to you using the loan estimate at the beginning and during the mortgage process. Now, finally, closing and funding, step 14 of steps to unlock your dream home. What is it? The closing and funding is the final part of the transaction and generally occurs at the title company. You sign your legal documents, the seller signs their legal documents, and the lender wires money directly to the title company, who then disperses the money you just borrowed to all interested parties. Here's what you need to know. Part of your closing documents will be the CD, or closing disclosure. It is a standardized document, just like the loan estimate, that details the finalized terms for your loan and breaks down all the costs, fees, and final payment. The initial CD must be e-signed at least 3 days before closing. Often, what we call the initial CD may not be balanced between the lender and the title company, which is the buyer and the seller. I encourage everybody to compare it to your loan estimate or the most recent loan estimate that you received. Remember, the numbers can change between the time of e-sign, the final closing, and it usually only slight and can be up or down by the time you get to closing. Title and the lender, again, will have the final reconciled numbers. If there is not an invoice for a service performed, you will not be charged for a service that wasn't performed. And your total mortgage payment, the CD will also include your total mortgage payment, PITIA. And if we did our job well up front, it will also include the cash to close, and the cash to close and the total payment should be accurate with what we started with in the very beginning with the loan estimate. At Guaranteed Rate, we offer 3 types of closing: a traditional in-person, Number 2, a hybrid close and a standard e-close that you can do anywhere in the world 24/7. You'll need to bring a valid photo ID that is not expired. You'll need to arrange for a wire or a bank check made payable directly to the title company based upon the final figure listed on the closing disclosure. And look, at closing, they're going to give you your first payment notification. Keep a copy, make a picture, because you never want to miss that first payment. And that's the number one phone call that I get for folks after closing is, hey, when is my first payment due? And where do I make that payment? And once all documents are signed and notarized, fax to the lender for a quick audit. The title company will officially declare your loan funded. And at that moment, you have become a homeowner and unlocked your dream.
Has your home purchase come to a stop? Guaranteed Rate has an entirely digital mortgage experience that's safe, simple, and secure, even through closing. Find out how today.
Okay, one final note here. What not to do before and during the application. What is it? Be very careful not to do anything that will change your current financial situation, and always notify us if something beyond your control occurs, such as being laid off, or, hey, I've had a guy retire before during the loan process, and actually he was forced into retirement by his employer. Here's what you need to know. Let's not buy a new car. Now's not the time to buy a new car. Let's not take out any student loans or any other loans. Let's not apply for credit cards. Let's wait on that big screen for the new living room. Let's not max out our existing credit cards. Let's not change jobs. And please, please, please don't miss payments to your current lender. And that concludes our presentation. And my hope is I help you unlock your thinking, unlock your desire, and unlock your belief that homeownership is the right thing for you and your family.